I would be surprised if you don't see house prices continue to be a zero inflationary component, if not a negative one, which is what we've been seeing, meaning they've been declining in terms of owner's equivalent rent. So I just take it as he's continuing with his campaign promise of trying to find a way to help middle America, people that are suffering out there. But the reality is it's not going to change the housing market. It's not going to be some big fix, but I think it's just additive to attempt to get the stimulus going in the way that we have using the tools that he has available to him. From the Trump administration, and whether this is coming from the Pentagon, whether this is coming from other people inside the administration, there's clearly a desire to reshift the tables. And I think a lot of it is preparation for the future. But wherever there's rare earth, and I can't say this loud enough, and there's mining capabilities, they don't want that going to China. They don't want that being something. And even though Venezuela is not a big producer of rare earth, they do have deposits and they're close to Brazil. And I think the US probably learned their lesson with Africa, where China has a very big stranglehold, that we have to protect some of the minerals that are necessary for the AI technology of the future.
Looking further out toward 2030, the humanoid revolution will strike the final blow. When AI-driven robots start building homes, the cost of labor, the biggest component of housing, will collapse. For the majority of Americans, the era of your home being your primary get-rich vehicle is over. We are moving into a fiat world, where assets like private equity and housing are being devalued, while capital flows toward hard growth like Bitcoin and gold. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
He does, and I think the driving factor, which is going to be a theme this year, is that right now prediction markets have the Democrats taking the House at 80%. So housing affordability is an issue. And we've talked about it since he made the statement of declaring a national emergency on housing. So clearly what they do in the administration, they know they have to do something on this. They want to do it at a time clearly when people have money coming in. So the one big beautiful bill, there's going to be a lot of surprises that come out. And I think it's important for people to recognize that when we were just talking about the GDP numbers, the 2 quarters before of 4%, and then currently GDP now at close to 6%, that's before we get the stimulus of the tax side in Q1. So let's assume we end up at 4% for Q3 and we get a 4% in Q1 because of all the stimulus stuff coming through without getting inflation. You'd be talking about year over year at 4%. You got to go a long way outside of COVID and the bounce back, a non-recessionary post period. So I do think that the housing market is part of his promise to the American people of the distribution of wealth issue and trying to find affordability for housing. I think it is a mistake to fade the fact that it's going to have an impact. And if you want to take one side, it's very, very difficult to believe that housing prices are not going to be impacted. Meaning, I would be surprised if you don't see house prices continue to be a zero inflationary component, if not a negative one, which is what we've been seeing, meaning they've been declining in terms of owner's equivalent rent. So I just take it as he's continuing with his campaign promise of trying to find a way to help middle America, people that are suffering out there. But the reality is it's not going to change the housing market. It's not going to be some big fix, but I think it's just additive to attempt to get the stimulus going in the way that we have using the tools that he has available to him. When you get to the point, Blackwell, let's say it goes from a 10 gigawatt, so 10 gigawatts of power to do the AI we're doing now. That's not the actual number, but let's just say that's what it was. So you're now going with Blackwell down to only 5 gigawatts necessary.
So it cuts it in half.
Cuts it in half.
Okay.
Rubin, which was announced, will take it down to about 1.
So it's a 90% reduction.
90% reduction.
From the current version to
exactly.
What is, I guess, going to come out in 2027.
2027, yeah. Okay. So the reality is, even if we never build another data center other than the Blackwells that are rolling out this year, that percentage of the overall power usage will go from 20% to 30% to 40%. Colossus 2, Musk's next part of Colossus, is supposed to be done in the first quarter. He talked about it on the interview. That's a massive gain. So that's why the models, and you use the car. Let's go further back than a Honda. And let's say when you left horses and you started with cars, and the first car is the Hopper, then you get to a Porsche, which is the Rubin. Well, the first car is going a max of 15 miles an hour, and now the Porsche is going at 150 miles an hour. That's what you're talking about. So you're getting more performance per the watt, and that's what Jensen Huang talks about. The reason that's important, the models get better. You and I see it. We love using them, and I love using them more. Well, Goldman Sachs, Morgan Stanley, Eli Lilly, every company you can think of is going to start rolling out AI agents. Well, when you start rolling those out, the usage goes up. Well, you need more storage. You need more places to run these things. The hyperscalers need data centers to supply that. There is a bottleneck that is happening. So the companies, in my opinion, that are going to work this year, energy companies, because we need energy. And now it's all energy companies because of Venezuela, because of Greenland, because of defense, which I'm sure we'll get to. It's a major theme for me. But I think energy, we need power. It's not going away, and they're going to find ways to get it. Second thing is you're going to see financials, profitability story. You're going to see AI drug discovery. So the pharmaceuticals are going to be involved in this. Insurance companies, go through the list. Anybody that's a paper pusher that can benefit from AI is going to see their margins increase. And here's the story. The same way when ChatGPT came out, if you had the forward look to go, oh my God, we're going to need tons of GPUs. The gift that keeps on giving for the next 3 years is once efficiency gains start, I want people to think about this as Ozempic. You take that first pill, you lose a little bit of weight. As long as you stay on it, you're going to keep losing weight until you get to where you're as efficient in terms of your body as you can be. The same thing's going to happen with profit margins. Once you get more compute and you're replacing hiring and your profit margins are rising as a company that's been bloated, 3 years from now, it's going to be even better. So that story, people are going to start focusing on companies that are probably have a value component where estimate revisions are going higher. This is a major shift. And I've said it before, the biggest risk for this year is the size of growth funds versus the size of commodity funds, the size of growth versus value, the size of quant strategies that are momentum based. I think this is a massive shift that will last for more than a year. 3 years, this bottleneck will never go away. And Elon Musk said it. We can't get power fast enough. There's two parts of this that I think are important. You can't answer the questions of kind of the to use the risk, the game of risk. We're clearly talking about strategic locations that are important, and we want to create a tripolar world, meaning we want to separate being close to anybody, and we want to make sure that Russia, and at least from the US military perspective, they're clearly targeting the Russia-China alliance and making sure that wherever they're aligned on something, whether it's Venezuela, where all three of them are aligned, including Iran, whether it was Iran. But when you go through this, China hasn't really responded. They didn't respond to Maduro in any kind of big way, and they didn't respond to Iran, which was last year. So there's clearly some kind of an agreement of like, here's what we're doing. We are not going to get ourselves involved with Taiwan. Because think about it, you've got Taiwan close to China. The US can't go over there and do anything. So we're trying to onshore chips over here. In the case of Europe, you've got the Russia, European situation right there. And now we're targeting all these places. I really do want to emphasize to people that AI changes the nature of speed. And this is the part that I think is really hard.
While housing stagnates, corporate margins are about to explode. Visser compares the rollout of AI agents to the weight loss drug Ozempic. When a company takes that first pill of AI compute, they lose a little weight or bloat. But as they stay on it, replacing paper-pushing roles with AI agents, their efficiency skyrockets. From Goldman Sachs to Eli Lilly, every major corporation is moving toward a model where profit margins rise as hiring slows down.
50 years ago, having a base in Cuba or having anything for Russia to come over, yes, there's a missile component. That's what freaked people out. But from a ship component or anything like that, it's like, okay, doesn't matter. Now you're in hyper time. Like everything moves so much faster than it used to. And we're using lasers and the next thing. So I think the oceans and the distance and who your trading partners, it's one of the reasons why I've said repeatedly, I love Brazil as an investment. Now we'll get through the election this year, but Brazil has all the resources. It is clearly in a great negotiating point between the US and China. It's a gigantic country with tons of vast things. You've got the US already working with Malay. We left him out of the discussion, but there's a reason why the US wants Malay working with them too. So I think the strategy from the Trump administration, and whether this is coming from the Pentagon, whether this is coming from other people inside the administration, there's clearly a desire to reshift the tables. And I think a lot of it is preparation for the future. But wherever there's rare earth, and I can't say this loud enough, and there's mining capabilities, they don't want that going to China. They don't want that being something. And even though Venezuela is not a big producer of rare earth, They do have deposits, and they're close to Brazil. And I think the U.S. probably learned their lesson with Africa, where China has a very big stranglehold, that we have to protect some of the minerals that are necessary for the AI technology of the future. First of all, mortgage spreads have come in and mortgage rates have come down. If 10-year rates stay around where they are, and let's assume they stay just above 4% for the entire year, and we see short rates go down, I'm going to bet, based on the Fannie Freddie thing of we want you out there buying bonds, that his target is to move mortgage, a 30-year mortgage below 6%. If you knock house prices down 3%, if he does some other things to allow the home builders to kind of reduce costs, whatever the case, you're reducing the monthly cost through a mortgage price enough to get some increase in housing. And that's why I said this is not going to solve the problem. And I don't think people are going to worry, because the beauty of a house, you own it, you actually don't know what the price is until you try to sell it. Mm-hmm. So you might see national numbers come across and say house prices are down 4%. Nobody knows what that means, because they don't know what the current value of their house is. So I don't think they're going to freak out on it.
And those people may be less likely to actually be selling their home, right?
Yeah.
To like leave their home. They're kind of been there for a long time. They're going to stay there.
The housing problem in the near term to me is not going to be an issue. But I do believe, if I had to guess, that even with the stock market going higher, I don't think you're going to see house price appreciation outside of maybe, places that wealthy people try to get something that doesn't go down in value. But I do think for the majority of people in the country, for their house, I do think you're going to see house prices come down. Eventually, when you get to humanoids, and this is, again, 5 years down the road, this is not this year's business. Humanoids will start being rolled out this year. They won't be impacting housing costs until we get into 2030. But I've said to everyone, I'm like, when you get to the point, you have to think the value of a home. I mean, I sold a home in New Jersey a few years ago, and I was shocked at the value of the home because I was involved with the building of it versus what people wanted. They didn't want a 10-year-old house. They wanted a new house. And it didn't matter if the quality of it wasn't as good as the older one. They wanted something new. And that seemed to be they told me that's young people just would rather buy something new. They care a lot about that side of it. Oh, okay. Well, the cost of it will go down with humanoids because labor is a big component of it. That's going to start hitting housing prices when we get into 2030. The cost of building a home from the humanoid side, the labor side, is going to go down. And I think a lot of other AI components. So the physical world, when we get to 2030, will make the housing problem there. So I think we're in a perma-decline in house prices. I don't think you're ever going to see them go up again. And this fits in my fiat world of you start losing assets one by one. You lost private equity. Private credit's now a problem. Stocks outside of the US haven't performed well over the course of the last 20 years. And this is where it all feeds into Bitcoin. It feeds into gold. I think you have to start preparing for a world where the fiat assets, and in particular the growth mag 7, start to be an issue. And you're looking for growth in something that can be up 100% in a year, 50% in a year. I don't think you're going to be able to find that the way you did the last few.
The biggest risk this year isn't a crash. It's being on the wrong side of the momentum to value shift. The massive growth funds are bloated, while commodity and energy funds are starving for capital. As efficiency gains from AI start to hit the bottom line of value companies, and as the bottleneck for energy stays tight for the next 3 to 5 years, the money will flow where the resources are. Are you positioned for a world where your house is just a place to live, but your energy and commodity portfolio is your engine for wealth? The rules of the game have changed. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.